Good morning, and welcome to Italgas Strategic Plan Presentation 2026-2032. This is going to be quite a long presentation. We are going to have our President, Paolo Ciocca, our CEO, Paolo Gallo, our Head of Italgas Reti and Distribution Business, Pier Lorenzo Dell'Orco, and our CFO, Pier Latour, presenting the plan to you all today. We are very, very pleased to have such a big audience, and it's a very important day for all of us, so welcome and thank you.
Italgas, built on networks, driven by intelligence. Is it a program? No, well, it's a reality. So good morning, ladies and gentlemen, and welcome to the presentation of Italgas 2026-2032 Strategic Plan. A warm welcome to all of you, analysts, investors, and journalists who are here today, joined by many Italgas colleagues who have traveled from different parts of Italy and Greece. This presentation bears witness of the cohesion of a group already geared towards the full delivery of the actions that we will present here today. We meet again only 7 months after our last strategic update. This close interval is only incidental and in view to recover the ordinary rhythm of our updates, altered by the 2i Rete Gas acquisition. This short time will allow us to share with you the pace at which the group is advancing. What we are presenting today is continuity and acceleration. Continuity and acceleration. Continuity in vision, acceleration in targets. Paolo Gallo and the management will introduce you to the concrete results that the integration of 2i Rete Gas and the delivery of synergies have produced over these months. We are living through a phase in which the European energy system is under a pressure which, in their persistence and intensity, have no recent precedent. Geopolitical instability has made it crystal clear, in the good and in the bad, what was already evident to those who look at infrastructure with a long-term perspective. Energy security is an enabling condition for the competitiveness of countries and therefore for the well-being of all communities. Networks, digital, widespread and punctual, resilient, are the most concrete response to, or better, response that the industrial system can offer to this challenge. Italgas has known this almost for 190 years. And today, in its position as Europe's leading gas distributor, it is best placed to take on this role with full responsibility. This has not been a position that has been won by inertia. In 2017, when the digital transformation of energy networks was still a frontier topic, Italgas made a decision that ran against the tide, yet provided farsighted to invest with conviction in the digitalization of its own infrastructure. That choice set in motion the progressive construction of a technology platform that today, beyond being a competitive asset, is an international benchmark, and which has proved to be the indispensable prerequisite for responding to the fluctuations and pressure to which the energy system is subject today. Anticipate rather than chase. This is the hallmark that always has distinguished the group's path. Italgas changes, grows and expands, yet remains faithful to what has defined it for many years, an industrial force that builds real progress, generates lasting value in the service of the communities, territories, countries in which it operates. Of this, we need to be grateful to all women and men of Italgas who have embraced with confidence this bet of organizational and corporate change. Let me now hand over to Paolo Gallo. Thank you and best wishes for your work today.
Good morning. Good morning to everyone and welcome here. Let me start with the presentation. I will be joined in a moment by Pier Lorenzo Dell'Orco and Pierre Latour that will help me to present our plan. But before we move, just a very quick list of the things that we are going to touch today. We are going to look at the market environment. It was mentioned by our chairman before. We are in a very peculiar and particular time regarding energy. Then we will update you about the progress that we are making, about the integration and the synergies we are delivering relevant to the Italgas acquisition. Then Pier Lorenzo Dell'Orco will present to you the investment plan, and Pierre Latour will give you the numbers of this strategic plan. But before jumping into presentation, let me start with what happened in the last 10 years. In November, we are going to celebrate our 10 years of emerging from Snam and back to the stock exchange. I think this slide and this page tell you the story of the several promises kept. The promise to deliver a long-term growth, mainly through innovation. The promise to create value for all our shareholders, to our people, and the community that we serve. The promise to become an undiscussed leader in our industry. In 2017, we launched something that none of the other competitors has never thought, digitization of our network. In 2018, we started the journey in the energy efficiency. In 2021, we decided to participate and won the international tender in Greece, acquiring the DEPA infrastructure. And later in 23, we scaled up in the water business. And finally, last year, we had the big acquisition of Italgas. I think the numbers speak for themselves. Adjusted EBITDA nearly tripled. Adjusted net profit more than tripled. And we delivered to our shareholder in this year 2.5 billion of dividends, without an outstanding total shareholder return of 360% since 2016 listing. If you want to look from a different perspective, In 2016, we were 100% domestic gas DSO with strong heritage and also with a lot of conservatism. We were probably the most traditional, the most conservative company in the industry I ever seen. Today, we stand as an undisputed leader in the gas distribution business in Europe, both in terms of size, but what matters more in terms of innovation capacity. With business portfolio that has been enlarged to energy, efficiency and water service, as well as an international footprint in Greece. All these numbers prove a successful transformation driven by a clear vision, an innovation culture that is today our DNA, a disciplined execution, and I would say thanks to all our people, men and women, that has believed in Italgas and the vision that Italgas has developed over the years. What is next now? Which is the next chapter? So transformation is done, platform is available, is built, and now it's time to deliver. And we have a clear 3 engines. The first engine that is going to be the core of this plan as well as the coming years is the AI transformation. This is where Italgas leads the industry by far. And I would say not only the gas industry. We are deploying agentic AI at scale, not as a pilot, not as a slogan, not as a POC, but a real lever for operational efficiency across the entire business. Smarter networks, smarter processes, smarter decision. AI has become the backbone of our operation. Consolidation is the engine number 2. Italgas gas distribution market, the tenders, finally are moving. Tenders are accelerating, and we have already seen clear evidence in the past months. Furthermore, M&A opportunities are opening up, and we are ready financially, operationally, strategically to capture them and expand our leadership. Last but not least, synergies. We are not waiting. You will see the numbers are phenomenal, and it is only less than 2 years from the acquisition. Our vision is very clear. We want to expand our leadership through network innovation and value creation for all our shareholders. This vision is built around our ability to drive innovation, AI transformation, and energy transition, combined with our capability to allocate our CapEx and our continuously operational efficiency. This is the way that we run the businesses across the 3 segments in which we operate. Gas distribution remain our course, remain our foundation for the future. Water services, where we think that our digital capability are bringing major improvement to reduce water loss and to increase efficiency. And the first results are already coming. Energy efficiency, where that is across all our business, where we operate to support the decarbonization of the system as well as reducing energy consumption. And the vision translates into the 4 goals that you see here. Reinforcing our leadership in gas distribution through innovation, accelerating the digitization, even more important, accelerating the AI application in our day-by-day operation, deliver a sustainable growth through the return that make our shareholders happy, and support the energy transition, because our networks are at the core, are fundamental to provide an energy at cost competitive with security of supply and with decarbonization movement. Let me take a look for a moment give you a general overview of what is going on the market. First of all, let me start from the bigger picture about global energy demand. Energy demand is on the rise, and the drivers are structural, are not cyclical. World economy keeps expanding. The global population is growing. More people from developing countries want to use more energy. And on top of that, we have an entirely new source of consumption, data centers. The estimation is that by 2035, data center will require an additional 800 terawatt hours per year. It's a huge number. If you think about it, it's more than 2 times the consumption of Italy of energy. This is something that we cannot forget about. And in this context, gases, and I'm using not gas, but gases as a term, will remain essential, combining efficiency, affordability, flexibility, and reliability. For years, we have talked about the energy trilemma. And let me say that I first talked about this term years ago during an interview in London with Bloomberg. But I think that now, energy trilemma is probably it's a too simple representation of what's going on. We are talking about security of supply, of course. We are talking about environmental sustainability, sure. We are talking about, even more important, the cost of energy. But now, on top of these 3 dimensions, there is a fourth one, that is what I just explained to you, the increased demand that is structural of energy. And that reshapes the energy trilemma significantly. We are no longer balancing 3 forces. There is a fourth one that put under pressure the other 3. And the complexity multiplies. And I think we should abandon the term energy transition. We should talk about energy evolution. Why? Because transition implies that you move from one system to another for a period of time. That is not going to happen anymore. Now there is going to be an evolution where multiple molecules, multiple technologies, multiple pathways are working together to meet growing demand while continuing to reduce carbon emissions and assuring security of supply, and more important, keep the cost affordable for industry and for citizens. That is the reason why, as we always said, gas DSO are not a legacy anymore. It is going to be a fundamental infrastructure that will help to manage this trilemma that has become a quadrilemma by the increased demand of energy. And let me just talk a little bit about the electrification. Electrification is the headline that everyone loves. But let me give some facts, some reality behind that. I mean, the demand of electricity is growing. There's no doubt about that. Drivers are there, and we are not here in denial. But the electrification is not coming for free. If you look at the numbers show very clearly where we stand. The recent energy crisis, the rigidity of renewable energy production, and the technical and infrastructural constraints are showing how this process of electrify everything is not going to happen. It's just a fantasy. And it will never happen as somebody are imagining. You cannot, and we cannot decarbonize our economy just using ideological position. Because we need to think, first of all, that we need to give to our economy energy that is cost competitive. And in order to do that, you need to be sure that security supply is guaranteed. And in the next slide, in the next page, I will show you how our gas network and the molecules can do part of this job. The first driver is modulation. As electricity is essential, but storing electrons at large scale is expensive, is not real, is not going to happen. Molecule, on the other hand, can be stored easily. We have already several storage, and gas infrastructure is a natural storage too, and release when demand peaks, helping the system manage volatility. We can and we should pursue the carbonization of the molecules. Biomethane today, hydrogen, synthetic and natural gas of tomorrow, allow existing gas user to progressively reduce emission without forcing every customer or industrial process to switch technology at once. The third driver is infrastructure. Italgas, Italy, as well as other European countries, have an expensive gas network connected to home businesses, industrial districts. Upgrading and repurposing this network is more efficient than duplicate with a massive expansion of electricity infrastructure that will not meet the target. So the message is balanced. Green gases do not replace renewable electricity. They make the transition more affordable. They make the targets more achievable. By combining electrons, the carbonized molecule, and existing infrastructure, Italy and the European Union can move faster toward the goal set by 2030 and 2050. Which is the lesson that we can take from the recent crisis? How secure is the gas supply for Europe especially? And honestly, Europe is still exposed. It's still exposed by, let me say, by the natural situation. Europe has not a lot of energy resources. It depends for energy importation. But you can face that situation. You can reduce the risk of this situation if you don't rely on one single supply route, if you don't rely on a single area for supply. And I think Italy has proven, since 2022, that we can afford energy crisis if we are able to improve our infrastructure. And Italy has done a lot since then. And we have seen the result of that situation in the recent crisis. Just look at the level of storage today in Italy. That is a clear demonstration. So which is the lesson learned? That infrastructure are fundamental. Investing in infrastructure, make the infrastructure redundant, is the way in which we are preparing ourselves for any kind of future crisis. So in other words, the resilience is fundamental, and the resilience comes from different solutions. It comes from optionality. And that's what this diversification delivers. Let me just spend a couple of minutes about the REPowerEU. If you remember, after the invasion of Ukraine, Europe, the European Commission has issued a REPowerEU as a way to get rid of the dependence from Russian gas. And the vision at the time was very clear, to develop alternative sources, biomethane, hydrogen, energy efficiency. I think Europe should take care again of this vision, that should put into action something that has remained just on paper. If you think about, for example, energy efficiency, I think that is the best way to reduce our dependence, the best way and the cheapest way in terms of reduce our energy consumption. I think that European Union should take a step forward, should put into an action plan the objectives that were contained in the REPowerEU that are still very actual, even if it was developed back in 2022. If we take a look at about the market outlook for Italy, and then we will look at about Greece, what we've seen is that the gas demand is recovering from 2023 bottom, especially the civil segment is leading the way. If we look further, and that is based on several scenarios, we see that the overall amount of gas demand remains stable, same line, same level of today, with a growing penetration of green gases, biomethane and hydrogen, reshaping the energy mix and driving decarbonization from within. So it's clear that gases is and will still represent Italy's energy backbone for long periods. The molecules flowing through the network, of course, we see are greener over time, but the gas infrastructure itself stays central. Looking at Greece, that is our second country where we are managing gas distribution, here we see growth and momentum. Greek domestic gas demand has expanded sharply in the recent year with a double-digit annual growth over the last 3 years. This is a market still early in this journey with a significant room to run. And the engine, let me say, is the civil segment again, and this is projected to outpace the other segment. And two main drivers are powering this. First of all, us. We are expanding the network. We are bringing the grid into region that didn't have access in the past to the gas. And second, there is the second driver is the conversion of the residential use of coal and oil into gas that is cheaper, that is safer, that is more reliable, and brings also lower emission. Now, I'm going to touch the second chapter of this presentation that is relevant to what we have been achieved so far about synergies and what we expect to achieve in the years of the plan. We are not just on track, we are raising the bar. That is a clear bottom line. In particular, we have identified, since last October, fresh upside from AI-driven cost efficiency. That takes our target to 280 million of synergies by 2032, compared with the baseline of 2023. That is a 12% upgrade in respect of our previous plan. And if we compare, if we compare the initial estimation that we made in October 24, when we announced the acquisition of 2i Rete Gas, the initial estimation was 200 million. So there is 40% above that initial estimation that I remind you was just a top-down estimation. This demonstration, once again, that Italgas works continuously in identifying new opportunity, new area for synergies. And if we look at the delivery curve of the synergy, we reached 35 million in 25. In the first quarter, we have already at 90 million, and we confirm that by year end, we will be reaching 130 million of the overall synergies, with already some AI savings coming into the picture. But if you look at the curve, you will see that the new curve is in every single year higher than the one that we showed to you last year in the strategic plan. Also, on the revenue side, the work that we have performed since last October has identified as new area of investment in order to bring the Retegas, the 2 Retegas legacy network at our same level. And we have identified roughly around 300 million more of investment that will bring the overall revenues, additional revenues, to 120 million euro. And this activity to identify new potential investment has been carried out in these months while we are deploying the digital transformation of the 2 Retegas. We identify others, and that is the result throughout 2032. But let me just remind you the journey in which we are. If you remember, in 2017, we started with what I would call unglamorous work. Between the 17 and 24, we digitized and automated the network by developing more than 50 digital solutions and addressing more than 300 processes in our company using our digital factory. We were the first gas DSO to do that at scale, not as a proof of concept, not as a pilot, but at scale. And we put all our key assets under remote monitoring and control. We created a strong backbone of data, a strong backbone of processes, and now we stand on that. In the last 2 years, last year and this year, we are moving from automation to intelligence. And today, we have more than 55 AI models in production, over 120 agents we built ourselves in our digital AI room, and more than 2,000 people trained to work with these AI agents. AI is not any longer a pilot in the corner. It's already a transforming force in how we run the business. Our ambition is another step up: hybrid intelligence, human expertise combined with autonomous agents working as one orchestrating workforce, using our trusted data, because that is a fundamental prerequisite. The data that you are using for AI should be of a good quality, and a knowledge foundation. Let me say in one word, our ontology. Let me show what the future is going to look like in our exciting journey. Starting the field, the control rooms that we have, the 2 control rooms that we have, one in Turin and one in Florence, will become AI automated. AI reads the alarm, look at the event, analyze the events, recommend the action, and dispatch the crew. A live digital twin of the network will be available to our people to simulate and plan scenarios before we intervene on the asset itself. Our people are not going to be replaced. Their ability will just be augmented by the use of AI, and will make their intervention even more effective than before. If we look at the office, on the other side, every person will have personal secure AI tools for drafting, research, analysis, drawing, to do the day-by-day job more efficient. Autonomous agents take what is repetitive with no value, back office work, with a human supervising and validating, and is creating new roles. People dedicated to governing our knowledge, our model, our processes, our data. As I said before, in a more comprehensive word, our ontology. AI does the heavy lifting. Humans stay in connection, in command. That is how we are going to build tomorrow network. And we have already started. Let me give you some example. And the list, what we have already implemented, what's ongoing, and the future. What we have already implemented, you can see it. It's producing the majority of the synergy in 2026. What's ongoing? We are scaling up, extending agentic system into claims, contact center, procurement, network optimization, engineering. The future is roll out even a larger approach. Agentic system reaching every relevant corporate and operational process, with additional target of insourcing and of engineering and specialized technical tasks. The outcome is that we have confirmed the 180 million pool from synergies, efficiency, and insourcing. And on the other end, we have projected 100 million euro of AI productivity and efficiency. That has been upgraded about 40% in respect of our previous plan. But I want to show, because I'm sure that there's going to be a question about that, some specific cases that are already in operation and for which we have started to measure the result. 2 cases. Field intervention scheduling was released in January 26. What does AI doing on that? It's an optimizing algorithm that pull every key pieces of operational data into each technician daily schedule. It put together appointments, maintenance, emergency, construction works in one plan. It consider technician skill, shift, operational constraint, meteo, live geolocalization. And it optimize routes, and it do it every 30 minutes. After 5 months of using, the impact is significant. 10% increase in workforce utilization, 95% reduction in staff time spent in manual scheduling. I said 95 just not to say 100, because we don't need any more manual scheduling. And this is just the beginning. Second example, end-to-end customer request and complaint management. We receive 1,000 every year, 100,000 of this kind of requests. And this is a multi-agent AI. So there are multiple agent AI working in an orchestrated manner. What they do, they read incoming emails, text, attachment, and writing images, and then reading that they queries our enterprise system, and they look at all the data available in our system, so metering, billing, and CRM. From that, they reply directly to our end customer, or eventually, if cannot be replied, they dispatch a technician. For this initial rollout, because we just started this month, we deliberately kept a human in the loop, but in this initial test phase of 1 month, the results are phenomenal. 60% reduction in end-to-end handling time. Customer receive faster response. The communication are more structured, and we redirect our people toward high-value work. I wanted to give these two specific examples because they are in operation. So we are not talking about any more pilot, POC. This is real life. But now let me introduce Pier Lorenzo Dell'Orco on the stage and Pier Latour too on the stage. They will present to you, Pier Lorenzo Dell'Orco, the investment plan, and Pier Latour, the financial data. The floor is yours. Thank you.
Well, thank you, Paolo. I'm really excited to present you with the investment plan of Italgas Group. Last year, with the plan of last year, we set a historical record in terms of investment plan for Italgas, and this year we're even increasing our ambition. You see here a general overview of the CapEx plan of this plan. We have designed a cohesive capital deployment framework which touches all the business lines managed by the group for supporting growth. The left-hand pie shows the breakdown of CapEx by business, and you see that gas distribution covers more than 70% of the total CapEx, 13 billion over the time horizon 2026-2032. The 70% is made up of 64% for Italy, 7% for Greece. And then you will notice a piece of news, a significant increase in the share of CapEx dedicated to tenders, backed up by, as Paolo anticipated, the acceleration of tender calendar that we are facing in the last 18 months. Then we confirm our ambition in investment in water and ESCO, and we have retained some financial flexibility for M&A opportunities, which covers 4% of the entire pie. On the right-hand pie, you see the same CapEx broken down by area, and you see that network development and maintenance stays at the core of our investment plan, covering 44%, and we have a significant increase in digitization and AI, up to 27%. Let's notice that devoting more than 1/4 of the entire pie of CapEx to digitization is the best evidence of our ambition to become a real AI-driven technical network company. So this is to say that all these investments translate into tangible and measurable operational benefits. We will invest in asset digitization and AI transformation to increase our service level and to reduce the cost, the efficiency. We will invest in the development of network, basically by replacing older assets with new fully digital assets, and we will invest also in water, again, for operational excellence and in energy efficiency. All these translate into, all in all, an increase in operational efficiency, enhancement of system resilience, leaks reduction, which is of utmost importance for the impact environment, increase in safety, and enabling green gas dispatching, as I will tell you later. And on top of that, a reduction in energy consumption, which is, of course, of utmost importance both for economic reasons and for environmental impact reasons. Let's look at the same amount of investment compared to the plan of last year. As I said, we are increasing our ambition. You see here 13 billion euros, which marks an increase compared to last year of plus 14.6%, of course, excluding the expenditure needed for the acquisition of 2i Rete Gas last year. Let's look at the compare by business line. We see that there is an increase on gas distribution, net of the cash-in coming from the mandatory disposals ordered by antitrust body. This proves our capability of sustaining organic investment in Italy. Same for Greece, 1 billion is confirmed. We have 1 year more compared to last year. Again, we confirm 1 billion of investment. The significant increase in gas tenders, plus 0.9 billion compared to last year, up to 2.4 billion all in all. I said we have earmarked 0.5 billion for M&A, and we confirm with a slight increase our ambition of investment in water and energy efficiency. Let's now look at the Italian gas distribution investments. That's the area where most of the acceleration in CapEx is coming from compared to last year. Digitization, 3.2 billion euro, marks an increase of 14% compared to last year. This is basically because as we operate former 2i Rete Gas assets, we have fully integrated, and now we have a full control over these assets. We are identifying new opportunities of digitalization together with AI development that Paolo has already mentioned. We confirm the amount dedicated to network plus centralized investment. These investments are fully driven now by digitization with our predictive maintenance tool. We are in position of better allocating resources. We maintain the same amount of investment, but we better identify opportunities for replacement of assets and upgrading of the network. On top of that, tenders, which marks a significant increase of +59% compared to last year, up to 2.4 billion, driven by new tenders that will be awarded in the next years. Let's focus on gas distribution in Italy. I said 3.2 billion dedicated to network, for the digitization. This marks an increase compared to last year. The chapter of these investments are basically the same that we have already identified, but more and more initiatives under these chapters are coming out. We will basically complete the digitization of the networks acquired from 2i Rete Gas by 2027. This is a confirmation of the target that we have already announced last year. We are quite satisfied of the extraordinary performances of our patented Nimbus smart meter, we confirm our intention of deploying massively Nimbus in Italy, and we will see also in Greece. We have increased the number of meters to be deployed over the time horizon of the plan, up to 6.5 million. Digitization under this 3.2 billion euro. Two main chapters are digitization of the assets and smart metering deployment. Concerning digitization of the assets, we have conceived a two-stage program, leading by 2027 to 100% of the city gates remotely controlled by DANA from our control rooms in Turin and Florence. The second step, we are already working on that, will come later. By 2031, we will have completed the full digitization of the smaller plants, district governors, and the smaller pieces of equipment across the network. Let's recall that with the acquisition of 2i Rete Gas, we have acquired a massive amount of plants, 12,000 district governors and 1,200 city gates. We are saying that we are going to digitize this massive amount of plants in a very shorter time compared to what we have done on Italgas legacy plant portfolio. On the right-hand side of the slide, you see the smart metering program. As I said, we are excited about the performances that we are collecting from the field with new Nimbus smart meters. We have now more than 220,000 meters in place, even more than that, because every day we are adding up new meters. So it's not a pilot or a test anymore. This is a commercial product which is proved to be superior compared to all the other smart meters on the market. You see that the performances in terms of capability of transmitting remotely the readings of consumption are exceptional, nearly 100% compared to an average of 94% for GPRS or 2.G technology and 97% for the most modern NB-IoT technology. And again, for remote management performances, which is the capability of remotely disconnecting the gas when needed, the performances are even better compared to the average of the market, 95% compared to an average of 70%. These, all in all, of course, translate into a higher level in service quality, but also lower costs for what we can do remotely. Now let's move to network. Network, we confirm more than 5 billion dedicated to this chapter of investment. We will progress in repurposing and upgrading our network, which basically translate into replacing older assets with new fully digitized assets. On top of that, we are going to expand the network, especially driven by the tenders that have already been awarded, that are included in this organic CapEx plan. And on top of that, some more opportunities in Sardinia. We have to complete the methanization project, and a new entry in Cilento, in the south of Italy, new methanization, an area in Campania, which has been brought to Italgas along with the acquisition of 2 Rete Gas. All in all, we plan to work on more than 4,000 kilometers of network over the time horizon of the plan, putting together replacement of older pipes and extension of new pipes. And we are going to increase dramatically the rate of inspection for gas leak detection through the cutting-edge technology of Picarro that we have already fully adopted. And we plan to achieve 200% of inspection, which means, all in all, 300,000 kilometers per year to be inspected with Picarro fleet. An important part of this CapEx plan dedicated to network is driven by the tenders that have already been awarded and are included in the organic CapEx plan. Last year, when we presented the plan, we had 8 awarded items. Today, they have increased to 11. We have 3 more. As I said, we've seen an acceleration in the tender calendar, and we will talk about later. But this increase in the tenders that have been awarded in the last 12 months has led to an increase in the CapEx dedicated to these tenders, 1.3 billion, which marks an increase of plus 30% compared to the previous plan. This CapEx will allow us to work to invest in more than 2,000 kilometers of network, including extension and repurposing of existing networks. We will increase the redelivery points by 100,000. And what's more, we expect to have 2 more awarding by the end of this year. These 2 awarding are not included in this 1.3 billion CapEx. We are waiting for the formal award by the committing authority. So let's move to the tender CapEx plan, which is one of the pieces of news of this CapEx plan. As I said, we are experiencing a dramatic acceleration of the tender calendar over the last 18 months. An acceleration, so we have reviewed, as usual, our CapEx plan related to tenders, taking into account this acceleration in the near term. And in the long term, we have confirmed our expectations with no delay. So all in all, we plan over the horizon of this plan to be awarded with more than 100 items and to invest 2.4 billion euro, which marks an increase of plus 59% compared to the previous plan. And the addition in terms of redelivery points resulting from the awarding of these new tenders is equal to 2.5 million redelivery points at the end of the plan, with an increase of plus 20% compared to last year. Our investments are not only dedicated to the network itself, but in general enables the unlocking of green gas potential in Italy, because through digitization and through the installation of new biomethane connection, new reverse flow plants and whatsoever, we are in position of fostering the development of green gases. 2 chapters here, biomethane development. We confirm our expectation of increase in terms of new connection, up to 1.2 billion cubic meter per year of biomethane injection into our grids by 2030. Consider that only 3 years ago, we had only 1 connection to our grids. Today, we have 15, and we plan to reach 50 by the end of this year, considering all the connections that are under construction today. We have, meantime, started the operation of new reverse flow plants, innovative plants that allows us to debottleneck the grid in order to receive the full amount of biomethane produced by the producers. And looking at hydrogen projects, we have, as you know, inaugurated the first power-to-gas plant that we had announced last year in October in Sardinia. The plant is operating exceptionally well. And around this plant, we are building a work stream of R&D projects. First of all, blending the hydrogen together with natural gas. Both in Sardinia, and we have initiated a second project in the center of Italy. Right today, we are increasing the blend percentage up to 5%, so above the threshold set by Italian law, of course, in agreement with the bodies entitled to control, the Minister of Energy, the Fire Brigade, because we are using this plant as a platform to test the increase in terms of blending and hydrogen injection, and we plan to reach 20% by the end of this year, which will make this plant a unique site all over Europe. And on top of that, we are designing new R&D projects around the plant concerning the installation of a fuel cell, which will use the surplus of hydrogen produced when there is no demand from the users, and the installation of a methanator pilot plant, which is basically a plant which produces synthetic methane by the combination of hydrogen produced by our power-to-gas plant together with carbon dioxide. Let's move to Greece. In Greece, we are confirming 1 billion of total investments in this plan, and 60% of this amount will be dedicated to the network, and more than a quarter again to digitization. Looking at the network, we plan to lay down more than 2,700 kilometers of pipes, landing at the end of this plan to 11.4 thousand kilometers of network, which marks an increase of 200 kilometers compared to the previous plan. In parallel, we plan to increase the number of redelivery points connected to this network by 56% until 2032, reaching more than 1 million redelivery points at the end of the plan. And again, this figure is increased compared to the previous plan. We are going to fetch new opportunities of development, especially in Western Greece and Epirus, which will sustain this CapEx plan. And again, in Greece, we are porting the technologies that we have successfully experienced in Italy with our assets, both in digitization, smart metering, and biomethane and green gases. Concerning digitization, we plan to digitize 100% of the plants of ENAON by the end of this year. We have already reached 94%, so the target is we will for sure catch this target. We plan to replace all the traditional meters in Greece with new Nimbus, and we have developed a specific Greek version of our Nimbus for this purpose. We have already installed more than 5,000 Nimbus there, and we will plan to replace completely the traditional meters with Nimbus meters by 2030. And looking at biomethane, although Greece is a step behind Italy in terms of legislation, incentive schemes, in Greece a new law has been recently enhanced, which sets clear rules for biomethane development. So we are pretty confident that there will be a very good opportunity for biomethane development also in Greece. That is why we are working in order to promote connections to the grid. We have none as of today, but we plan to reach 59 new connections by 2032. Then let's touch a little bit M&A. As I said, we have earmarked €500 million for M&A opportunities in Italy and abroad. We start from the fact that we have proven to be fully capable of creating value through M&A, both in Italy and abroad. And with the recent 2 Rete Gas acquisition, we have demonstrated to be able to fully integrate the acquired entity in a very short period of time, to streamline the operation, to create synergies, to fully digitize the assets with a shorter time track. So we will leverage on these capabilities in order to evaluate any new opportunities in M&A in Italy and foreign countries. We're not announcing any deal today, but we are ready to evaluate any opportunity which meets a very stringent set of criteria. That is why we say disciplined M&A strategy for selected options. Basically, we will look at stable macro environment which supports long-term infrastructure investment, a place where the regulation is fair enough and predictable, and deals where Italgas can play an industrial role in order to create value through our best practices. We are not really interested in being a pure financial stakeholder. Let's move to water. In this sector, our priority is basically to enhance system resilience and operational performance. We plan to do that by continuing the investments that are already in place under basically 2 chapters. You see here on the left-hand side, interventions on infrastructures. We plan to intervene on more than 1,000 kilometers of connection and pipelines, both by replacing older pieces of assets and extending the existing assets. And we plan to upgrade some infrastructures that are dedicated to, for example, wastewater treatment or the network itself, for example, in Sicily. Right-hand side, the second chapter concerning digitization and energy efficiency. And here we are deeply leveraging on the capabilities of Italgas in the gas sector and Geoside for energy efficiency services. So we plan to digitize 100% of assets in water industry by 2027 to enable remote control like we do in the gas, introduce AI agent automation to increase the efficiency of our operations, and to complete smart metering. On top of that, we are deploying some energy savings initiatives in order to reduce energy consumptions on this grid. On top of that, we are assuming that within the time horizon of the plan, we will consolidate Sicilia Acqua and Acqua Latina. So the combination of our investments together with the consolidation will lead us in a sharp increase of the results of the water business over the time horizon of the plan. We plan to double the revenues. We plan to triple the EBITDA. We plan to increase the RAB by 8 times up to 350 million. We will reach an EBITDA margin higher than 55%, and we will slightly increase the CapEx dedicated to water by 50 million, reaching about 500 million total investments. Now, let me
I will just speak a little bit about one of my favorite subjects, that is the energy efficiency, geoside. Why I'm saying my favorite subject is because I said before, energy efficiency is one of the big levers in order to achieve the energy transition target, the decarbonization and so forth. Unfortunately, it's the probably most tough job that we need to take, but it's extremely interesting and challenging. And the fact that Geoside, first of all, is working with all the group companies in order to test, to do pilots, and then to deploy new energy efficiency solution is the proof that we strongly believe in the energy efficiency. And then Geoside, after testing that, is offering similar solution or same solution also to a third party. The focus here is exactly the same in the gas distribution, digitized solution to the customers, and using all our experience in gas distribution as well as AI to improve operational efficiency of a third party. You know that the regulation has become stricter, less subsidies, but we still think that there is another way in which we can achieve the energy efficiency target, especially in the business to business. That is our first priority. And in that case, we are ready to invest also from our side in order to support industrial customer in achieving achieving energy efficiency, because if you're able to reduce your energy consumption, you become also more competitive. And we are dealing with several different industries demonstrated that is a path that they with us can follow. And we are using our tools, say Mixer, and all the AI application that Geoside is developing. But we are very focused on value, so creating value for our customer and for us. We are not focused just making volumes of that. That is going to be, has always been our view. Nearly 300 million of investment over the plan period. Some small M&A in order to open up our offer. And you see our adjusted revenues by 2030 with an EBITDA of margin that is going to be around 20%. So that makes a completely different energy efficiency company from the other ESCO that are present into the market. Let me just conclude before giving the floor to Pierre Latour about our environmental target. Last but not least, we have reviewed our targets for 2030. We have increased in the gas distribution the targets. I should remind you that last year the level of emission, the reduction in terms of scope 1 and 2 emission was 55. Now we moved the target to 68%. The net energy consumption was down last year, the target 35%, now is 41, keeping the same net zero target for 2050. And that's why the reason is that thanks to the digitization, but then AI solution, we view that the target can be achieved, and that's the reason why we raised in respect of last year plan. Regarding the water, I mean, still the target that we set last year are very ambitious, reducing by 1/3 the Scope 1 and 2 emission, energy emission, as well as leakage rate on the distribution. It's really a very tough ambition, but we are fully confident to reach them, backed by our digital solution and AI solution. Finally, we confirm the Scope 3 objective to reduce by 24% by 2030. Now it's time to reveal the numbers. Pierre Latour will take the floor.
Thank you, Paolo. So, good morning, everyone. Let's now move to the final part of the presentation and take a look at the financial targets. So, we start with this overview. Now, our strategic plan is designed to deliver superior earnings growth, maximizing on our key levers. What are these key levers? The first one is disciplined investment allocation. The second one is operational efficiency. And the third one is balance sheet strength. Now, these levers are, of course, very much in line with the previous plan that was presented back in October. And if we now move on to the three graphs on the slide, we see on the bottom left, the first one, which represents the 15% increase in the investment plan versus the prior plan. And this will be achieved via a disciplined capital allocation, which is focused on our core gas distribution activities, including tenders. The second is a continued focus on our operational efficiency, which is supported by our technological leadership and optimized asset management on top of incremental synergies from investments. Now, the third one, I want to underline this point because I think it's extremely important, is our balance sheet strength. Now, we have our operations, which include investments and dividend distribution, which are substantially covered by our operating cash flow. Why is this important? Because this allows us to have the necessary financial flexibility to pursue incremental growth opportunities. If we move to the next slide, here we have a view of our total RAB. So from 15.7 billion to 21.7 billion in 2032, which implies a 4.7% CAGR. In other words, the 2032 RAB target is 1.4 billion higher versus the prior plan. And this reflects additional investment opportunities in tenders and a higher level of organic CapEx. If we were to exclude tenders and M&A opportunities, our RAB is expected to reach approximately 19.4 billion, which implies a CAGR of approximately 3.1%. Finally, on redelivery points, including tenders, the plan reaches 16.1 million. This is 0.7 million above the previous plan in 2031, of course. Moving on to our EBITDA. Our EBITDA is set to grow strongly, from 1.88 billion reported in 2025 to around 3.3 billion by 2032, delivering a CAGR of 8.4%. Now, the key driver in this growth is, of course, organic. We're planning, we've seen it, a significant RAB expansion, faster synergies, a higher level of efficiencies and AI, with tenders providing additional contributions. And of course, all of this is managed through a disciplined capital allocation. Now, this bridge shows the impact of efficiencies and AI synergies versus 2025. We've seen revenue synergies that are embedded in the overall growth trajectory, whereas, as Paolo pointed out in detail, our total cost synergies are 30 million above the previous plan. Our 2032 EBITDA remains highly resilient. Approximately 88% is linked to our Italian distribution, including tenders, where tenders represent approximately 11% of that 88%. The remaining 12% is, of course, represented by Greece, water, and ESCO. And the message here is, of course, that we want to increase diversification while keeping our portfolio firmly anchored to regulatory distribution. Moving from EBITDA to our bottom line. This slide shows that our growth converts directly into a superior net income and EPS trajectory. We're targeting EPS CAGR above 9% through to 2032. This is broadly in line with last year's guidance, of course, taking into account the same starting point. Net income, you can see, is expected to exceed 1 billion as early as 2029. This is a significant milestone and confirms the quality of our growth profile and the operating leverage that is embedded in the plan. So, in a nutshell, the message is simple. First, we're targeting EBITDA expansion. Secondly, we're targeting a disciplined financial management. And third, we are targeting synergy delivery. These are the three key enablers that will translate into sustained earnings growth and increasing value for our shareholders. Moving on to our credit profile. This remains very robust and resilient while supporting a materially higher investment plan. We're expecting our net debt to RAB to go back in line with our rating agency's thresholds, and we're expecting to do so in the midterm. This, of course, is a confirmation of last year's plan. And then, looking forward towards the end of the plan, we're planning to reach approximately 61% by 2032, so a continuous deleveraging process. Regarding maturities, the profile is well spread and largely protected by our fixed rate debt. And our financing strategy remains disciplined, so we will maintain a robust liquidity buffer on the one hand, while on the other hand, we will keep fixed rate debt well above 70%. Let's take a look at our financial guidance. So for the current year, 2026, we are confirming the guidance that we issued less than 2 months ago. So our adjusted EBITDA between 2.1 and 2.15 billion, our adjusted EBIT between 1.34 and 1.37 billion, adjusted net income between 0.74 and 0.76 billion, our technical CapEx at approximately 1.5 billion, and our net debt in the range of 10.8 billion. If we now move to 2032, our revenues are set at approximately 4 billion. Our EBITDA is at around 3.3 billion. EBIT at approximately 2.2 billion. Our consolidated RAB at approximately 21.7 billion. And as we said, our leverage to come down to approximately 61%. On top of this, 2029 is already looking better than the guidance provided in the previous strategic plan, and you can see it highlighted on this page. I now leave the stage to Paolo for our dividend.
Thank you, Pier.
Thank you.
So, we are at the end of the presentation. Yesterday, during the board of directors, we discussed the dividend policy. As you know, it's our practice to review the policy annually. If you look back over the years, we have always applied a 65% payout, never used the floor, meaning that we were able to always to create an attractive and visible return for our shareholder. And for this reason, the board of directors of yesterday decided to reaffirm the same dividend policy to 2028, 65% payout on adjusted EPS and the floor mechanism, knowing that the floor mechanism, we're not going to use it in the future. So we confirm that we will be able to pass the floor mechanism every single year, as we have already demonstrated. Let me just summarize what we have seen. We are indiscussed leader in our sector, in our industry, for size and for capability to innovate and introduce new tools, AI first, to create value and to reduce our cost, as well as to improve the quality of our services. The plan is built around committing 13 billion euro of investment, accelerate digitization, expand the regulated asset base, and you heard what Pierre was talking about, the numbers. AI is going to be the core for the months to come. I'm not talking about years to come, because the AI evolution is so quick that we don't talk anymore about years. We talk about months. And it's going to be our backbone for our operation. We are pleased that there is a clear improved tender scenario. I wanted to use the terms back to the future, remind some nice and famous movies. So finally, this is the first plan, strategic plan, that is the number 11, in which we are able to say that the tenders are accelerating. If you remember, every single plan before was that the tenders were delayed. And the numbers are proving it. So we are not just inventing. The numbers are proving it. Pier Lorenzo told you how much has been already incorporated in our organic growth and how much we are expecting, again, in 2026 and 2027. So based on all what I said, we think that we will be able, as always, to create value for our shareholder. This plan is ambitious, especially on the synergy side, but it's fully executable. I mean, we have a clear track record of the promise that we made and the promise that we were able to deliver. Thank you very much for your attention, and I open the floor to the question. Thank you.
We have several people there, so I'm just going on order. Please say your name and company name as usual. So use that. And James. And then we go in order.
Testing. Okay. It's James Brown from Deutsche Bank. Thank you very much for the presentation. It's very interesting. I have 3 questions, if that's okay. Firstly, on Ross, just wondering if you've got any more visibility on what to expect there. I think that's probably not, but anyway, I'll ask it anyway, because it's obviously quite an important topic. And what have you incorporated into your plan for Ross, if anything? And then secondly, just on the tenders, I was wondering whether you could explain a little bit more why they've accelerated. Is that because there's been any kind of change in the rules or the legal framework, or there's just less legal challenges? It's just interesting as to why that's happening. And then thirdly, you mentioned that you were deleveraging over your plan initially in line with what the rating agencies required, and then it sounded like maybe further thereafter. Is there a reason for that? Is that because you're more comfortable ending up at a lower level of leverage, or is it just because going out to 2032 you want to leave some optionality in the balance sheet if there are further investments? Thank you very much.
Okay, I'm taking the first question, and the first question it says, no, I mean, you responded to your question. There is no more visibility in a sense that we are waiting for the regulator ARERA to release the first consultation document. Of course, in our plan, we have taken into consideration, as we did in the past, some amount of money that should be given back to the system based on our efficiency. So it's included in the plan, but does not include the full ROS because we don't know the details. We feel, notwithstanding what I said, we feel that the ROS application will be, and you have seen it in all the presentation, will increase our flexibility and it will increase our ability to act as an industrial operator even more. And if I may, there is a very limited, very ROS application already inside. Think about the centralized RAB. Centralized RAB works on the concept of I will provide you a tariff that is number of euro per delivery point for everything that is not in the RAB. So think about buildings, car fleet, IT, and then you do what you want. And that is where we were able to extract more value. because we decided without, let me say, having any constraint to be, oh, it's OpEx or CapEx. It's just receiving a certain amount of money that is a tariff, and then deciding which is the best way to use that money, investment, renting, leasing, IT, and that is what we did. So it's a small example of application in which our ability to use in the best way that money is already demonstrated. So I'm hoping that the ROS will come into force very soon, because then we can extend this approach also to the operation. I'm taking also the third one. I'm sorry for Pierre for advancing, but I know that this question was coming, so I'm already, you raise every time. I mean, first of all, we need to go back under 65%. That is the commitment that we took with rating agency. We want to keep the rating as it is. And then the fact that after we go below 65% means that we will have, and we will probably find some other, as in the past, some other opportunity to invest. So I was thinking that you were asking about dividend policy or buyback. So I have anticipated, eventually answer. We are going to use all our financial flexibility to take opportunity. As of today, have you seen, we have put a limited number on the M&A, but that does not mean that if there are opportunities coming up, we will use that financial flexibility to take this opportunity and to deliver superior return to our shareholders. Tenders is Pier Lorenzo Dell'Orto that is looking after every single day what's going on.
Well, there is not a single, I would say, reason for this acceleration. I would rather talk about a wide variety of reasons on a case-by-case situation. I would say, first of all, let's start with the consideration that a lot of committing authorities in Italy, which are entitled to release call for tenders, they have been collecting the documents required for the call for tenders for years now. We have committing authorities that have requested to Italgas for 10 years in a row the documentation which is needed for releasing a tender while postponing the issue of the tender. Now, I mean, they have realized that time is now, and they have to release the tender after so many years. Then there are some other cases where municipalities are really interested in having a new operator which is capable of investing, modernizing the grid, extending the grid, making the grid ready for renewable gases, things that are hard to comply if you have smaller operators with an uncertain horizon ahead of them. So they're pushing to have these tenders in order to foster a new investment. And then there are also some municipality which retains the ownership of part of the grids, and they're interested in selling the grid to a new operator, and they can do by law, they can do that in Italy only through a tender and not on a one-on-one negotiation. So they're pushing to have these tenders in order to monetize their stakes in the grid. So it's a wide variety of situations.
Next question.
Thank you very much. Bartek Kubicki, Bernstein. If you don't mind, I will also ask 3 questions. I'll touch base on 3 topics. First of all, on M&As, and just going back to the history, you had an M&A wave where I think you bought like 200 or 300 million of assets, small premium to RAB, good transactions. And then somehow it disappeared. Probably, I don't know, there was no market for M&As, and now you are coming back to this topic. So I wonder whether something has changed, meaning are the smaller players somehow suffering and they are willing to be sold? And also, if you think about the other side, the buyer's side, whether the latest reshufflings on the markets, think about your disposals, think about other players selling assets, whether there is an appetite, you think there will be a higher competition for assets to be bought, both in M&As and in tenders from other players. So whether there's a willingness for others to consolidate the market as well. Second of all, I would like to ask about a topic which I think is quite widely discussed, which is the affordability. Because obviously, if you put more money into your network, you increase your revenues. And I guess we can all, or more or less, all agree to a scenario, but it's quite difficult to imagine an increasing demand in gas consumption from households. So consequently, this should translate into higher tariffs. So I just wonder, in your mind, what is the outlook for gas distribution tariffs in your perimeter, given the CapEx or investments you would like to do? And the last point, very short, on AI.
Four questions. Okay, great. You said 3 questions, now you're on 4.
Okay, I'm happy to.
No, that's okay. You can do it. No problem.
Okay, I mean, just on AI very quickly, because currently we are seeing AI impact on OpEx, AI impact on revenues, but whether in the future we can see AI impact on CapEx and consequently potential CapEx cuts, because you will be able to deploy artificial intelligence better. Thank you very much.
Okay. First one, something has changed. Let me say that if you remember, the period in which, you remind very well the period in which we were able to deploy a number of significant, I think 11 or 12 M&A transactions, small transactions. That was the time in which they were debating about tenders. So we were still saying that the tenders were ready to come and so forth. Now the fact that the tenders are coming, numbers are proven, probably somebody sees that is our perception, some small operator will see the opportunity to not to wait until the tender, but just to sell. Remember, to sell the overall company. Remember that when you sell through the tender, you sell assets, you sell the people that are working on the asset, and you sell some, and that's it, finally. So if you still have a company, maybe you think that is the right time to anticipate a little bit the tender and to sell it before. That is our perception as of today. So the two things, the tenders is moving and there are opportunities on the M&A, at least in Italy. I think that the two things are going together. That is our perception. It's one explanation. It may not be the right one, but we are just bringing you facts. From the buyer side, I think that it depends on geographical. What we have seen when we made a disposal is that what we disposed is assets that were located in specific geographical area of interest of the buyers. Some other did not attract any interest. So there may be some competition, maybe yes, not everywhere. That is my answer. Affordability. Well, first of all, we have shown that the gas demand will remain stable over the plan period with an increase on civil demand, slight increase on civil demand. So we don't see what maybe you see somewhere else, that there is a decrease in gas demand. What about the tariff? It's true that our revenues are growing, but our perimeter is growing. So it's not the increase of the revenues are linked to the increase of the perimeter and the increase of the RAB. But let me say on the other side, and I have already responded on the previous question, in our plan is embedded the amount of cost that will be given back to the system. I just remind you that in the period 2017, 2025, so the end of the regulatory cycle, we gave back more than 300 million euro that are coming just from cost efficiency. So the point is very clear. With our investment plan, first of all, the perimeter is enlarging through tenders, for example, or through M&A, and we are able to deliver to the system a benefit through better quality, but also through less cost. And because of the regulatory system, preview that and foresee that some of our efficiency should be given back, and we are very happy to give it back, demonstrating that with large operator like us, we are able also to bring benefit to the overall system, not only in terms of quality of the network, flexibility of the network, technology advance and everything else, but also through reducing the cost and giving back this efficiency, part of this efficiency, back to the system. On the number 4, yes, AI is impacting already CapEx. When I mentioned, for example, engineering is CapEx. What does it mean? That we are using and we are developing AI agent to start building our engineering activity, at least at the basis. So it will be more efficient, but I would probably say also more quick. So we are going to gain in terms of efficiency as well as we are going to gain in terms of time. So sure, AI, I mean, you see impact directly on the cost, but there are also activities that we are currently developing on the CapEx side. Engineering is the first area by far.
Thank you. Julius Nicholson here from Bank of America. 2 questions from me. So you basically upgraded the synergies and cost efficiencies target and front-loaded some of the tender assumptions. Yet the 2029 net income guidance is reaffirmed to above 1 billion. So I'm just wondering if you could maybe quantify that a little bit, because I would assume that the number that you have in your budget is higher than was the last plan, but it just says higher than 1 billion. And then my second question is on the tender chart that is in your presentation, just in terms of how to read it. I think you said previously that in 2026 you would expect around 12 tenders to come online, a few imminent, a few more later in the year. Are these 12 all here counted in 2026, and can we assume then that 2027 will be more, or is the way the chart is shown that a few have slipped into 2027 and that's why 2027 is higher? Just trying to understand the phasing a little bit better. Thank you so much.
Well, if you can just repeat, I lost your first question. Honestly, I did not understand your question.
Yeah. No worries. I was just curious why you only reiterated the 2029 net income guidance.
Well, because we don't want to give you the right number. Very simple.
Would have been useful.
Simple as that. So it is the 2029, the net income is higher than the 2029 net income of last year or but we didn't want to get into these numbers, so we just to say it's going to be about 1 billion. Then it's up to your fantasy to guess how much is. Tenders, scheduling.
Well, just, some figures just to be clear on that. So, as of today, we have been awarded from the very start of the tender process 11 tenders. That is the figure that has been incorporated in our organic plan presented today.
In the organic growth.
Organic growth.
So it's not in the tenders part. It's
no,
in the organic growth.
Yes. 11. It's 3 more compared to the previous plan. Last year we said 8. Now this 8 has increased up to 11. Then concerning new tenders to come, we have increased our forecast on near term, which means that we have been facing new releases of tenders that were not public last year. So all in all, we plan around 2 tenders to be awarded to Italgas by the end of this year.
With high probability, let's say.
Yes, very, very high.
Confident, high probability.
I would say it's
cross the
formality.
High probability.
Yeah. And on top of that, I would say 9 to 10, maybe 10 tenders next year, which are tenders that have already been published and we are working on that.
For which the presentation date is 26.
It's 26.
So
then we have some more expectation of tenders to be published in the second half of 2026, with offers to be presented in 2027 and then awarding to take place 6 to 12 months later in 2028, and this builds up the new plan. So there is an acceleration, all in all.
Hi, it's Dominic Nash here from Barclays, and thank you. I have to take 3 questions, please. The first one is, can you provide some color and some assumptions around regulatory returns, underpinning your EPS and EBITDA growth targets, particularly post-2028? Like, how sensitive is your EPS growth numbers if the allowed returns were to be reduced? On that as well, your 13 billion pounds CapEx program, how much flexibility would you have around that? If returns were too low, could you dial down the investment into your system? And what assumptions you've got for your sharing between customers and from your efficiency between shareholders and customers? And I know I just had 3 questions, but final one, because you piqued my interest at the start about the carbon pricing. I think Italy's been potentially at the forefront of maybe re-debating the carbon policy. What probability do you put on a material change in the carbon pricing going forward, please?
Okay. Maybe I will ask you to clarify some of the questions. What we have assumed, as always, we didn't take any position about changes in the WACC over the plan, as always. So that is our policy. We run internally sensitivities about if the WACC is going up or down, so we know exactly how the plan eventually will evolve in case the WACC is going up or down. So we know exactly which is the impact of changes in the WACC. But as usual, we don't take position on that. We are in the middle of the observation period, so we don't know yet what is going to happen by the end of September. If you can rephrase for me the second question, it would be nice so I can respond more.
Hi. Yeah. The second question is one that if they reduce the returns going out, what flexibility have you got to reduce the investment in the system?
Well, I think there's always flexibility in the CapEx side, in a sense that is the plan that we present to you is normally the base plan, the basic, the one that will give the highest probability, but we have also flexibility to either to increase or to reduce the CapEx plan, depending which is the situation. So honestly, I tell you, there are flexibilities, so there's no doubt about that. But in both directions. If we need, we can grow it. We were talking about before the financial flexibility. If we need, we can grow it. If we feel that it's important to reduce, we will do it. So we will adjust our plan accordingly to the point. Regarding if I'm correct, the sharing of the efficiency, right? That is what your question. Up to end of 2025, it was very clear. We had to give back all our efficiency, the 300 million, about 300 million we gave back to the system is the number. And that is coming through, if you remember, 50% given back in 2020, and then later on with the X factor. We have embedded a sort of X factor inside our plan to consider that there will be something after 2000 in the years to come. Of course, we expect to have the raw system in place. We will see how the efficiency sharing will be shaped. But in the meantime, just to be on the safe side, we have embedded such, let me say, so-called X factor inside our plan. That is consistent with the past. The last question, Pierre Lorenzo, also considering his being the president of Proxigas, can give you more flavor on that.
First of all, let's consider that Italy is a member state of EU, so we are basically not in position of setting an autonomous scheme. The scheme we have is ETS, Emission Trading Scheme, and soon to come, the so-called ETS2, the extension of the scheme also to end users, like families, like vehicles, like industries. And on those two items, the Italian government has opened a discussion at the European level. They have issued recently a decree, which we call the Energy Decree, introducing new measures in order to reduce basically the bills paid by enterprises and families. And among these measures, they have conceived some measures in order to mitigate the effect of ETS on the price building of kilowatt hour, of the electric kilowatt hour, which basically translates it into sterilizing the impact of ETS on the cost of electricity in order to reduce the price of electricity, which in Italy is produced for more than 50% with natural gas. The decree has to be cleared by the European Commission, so there is an ongoing debate table open between the government, the Italian government on one side, and Brussels on the other side, in order to approve for final clearing of this decree. So we're waiting for that. Then they will have to approve the national law enhancing the ETS2 scheme. Again, some piece of news will be possible for that in order to mitigate the impact on families consuming natural gas, but no figures on that.
Javier?
Very difficult to make any question after my talented colleagues, but I will try. Three on my side as well. The first one is on the philosophy of the business plan. So my impression is that the company is maintaining all optionality within the business plan. So it's a long-dated business plan that goes until 2032. Dividend policy just goes up to 2028. And the impression that I get is that the company does see opportunities to deploy capital. So deploy capital in new tenders, maybe M&A. I was interested in one of your comments mentioning that there are opportunities maybe in other infrastructures in Italy and elsewhere. So on that philosophy, what Italgas has done with a gas distribution network is replicable to plenty of other networks. So can you share with us your views on what could be next for Italgas deploying your talent into different infrastructure, where and how? That would be the first question. The second question is on your extraction of synergies process in the companies that you have bought. I guess that one of the reasons why there is an acceleration on the tenders is that the system see the benefits stemming from the acquisition of 2i Rete Gas, more deployment of capital, more acceleration on the benefit for all stakeholders, and so on and so forth. So I think that it is pretty evident that that benefit will continue. So the question for you is where we are in the business plan reaching the level of efficiency of the previous Italgas at 2i Rete Gas and then at the Greek activities. And the third question is, if you can, that is on the business plan granularity. If you can be a little bit more specific on assumptions related to the allowed return on RAP, I guess it's flat through the business plan presentation, then on the deflator assumption that you have assumed, and also on that X factor, the assumption that X factor that you are embedded into your numbers. Thank you.
If I may summarize, the first question is that, the dividend policy ending in 2028 is because in 2028 there will be the board is going to expire, so we don't want to commit for another board. So that is just consistent with the period, the time frame in which the board has been appointed. Generally, as an answer, we see this opportunity, and we have demonstrated that we can deploy capital in other infrastructure or in other geographical area, and we can bring the same approach that we are using in Italgas, and we can bring value. Let me make just a very quick example. Greece, that is not close to Italy, is a different language. We were able, in much shorter time, to have the same journey that we had in Italy, and thanks to the fact that we are able to immediately learn from past experience and apply for the future. So, Greece was able to do it in 3 years' time what we were able to do as a first time. It took us 7 years. So that is a way in which we learn from our mistakes and we adjust our behavior, our trajectory, our journey in order to be much more effective. The water activity is another example. We are using all our gas capability to increase and to improve the result of the water activity, and we are start seeing the result. Less leakages, more a portion of the network that is fully digitized. Through digitization, we are able to reduce the leak, or even the project capability. I mean, you know, in Sicily, we were able in 6 months, 8 months, to build 3 new desalination plants. That was never achieved before. So we put at disposal, in that case of Siciliacque, our ability, our project management ability to fulfill and to tackle with the task. So as Pier Lorenzo was explaining to you, we are looking around, not only in Italy, also outside Italy, with the 3 lanes that we tell you. First of all, macroeconomic situation that look nice. So European Union, generally speaking, is true everywhere, more or less. More important, fair regulation, fair and stable regulation. And the third one, if we can have a clear industrial role. As Pier Lorenzo was saying, we are not interested in financial position. We are interested in, because I'm going back to the question, because we are able to bring value, to bring expertise, to bring competence to any new acquisition. The second one is regarding synergies. We cannot tell you now that since July 1st, 2i Gas is completely merged in the Italgas Reti, we cannot tell you which is the level. The 2 companies are not distinguished. You cannot distinguish them anymore. What we can say is that based on the detailed work that we did at the beginning of the integration, that's the reason why we were able to progress forward in our efficiency, because once that going through the activity one by one to be implemented in order to create value, to reduce our cost, we find other opportunity, mainly driven by AI. Greece, as I told you, is, if you remember, couple of plan ago, we told you our Greek ambition that should be closer to our result in terms of efficiency, even if it's a smaller. I think we are there already. So we have already reached that level, but I think on the same time, the bar in Italgas is raised. So Greece is continuing to have some gap to be filled, but that's normal because our ambition is going after. Then I lost the 4th question.
Yeah, I was asking about the WACC, the X factor.
Anna Maria, you can respond.
Yeah, so as Paolo said before, for the WACC, we have maintained the same WACC across the plan period. On the deflator, as you see in the slide, we have around 2% on average. And on X factor, you listened to his comments before. We don't, it's something similar to the past, but we haven't provide
You have experience,
a
yeah.
number.
Correct. So I didn't know the number of the deflator, but you're right. The average is 2%. Yeah.
So next question, Francesco from Acro.
Thank you. Francesco Salabanca, Acros. Just to complete the picture on the assumptions, if you can share with us your assumption on the cost of debt, both, let's say, in the next few years and throughout the entire plan. And secondly, as regards to the water business, the growth is exceptional. So I wonder whether you can share with us the main drivers behind this growth, behind obviously the capital deployment. And secondly, also on the water business, it seems to me that based on previous calls that you would be happy to invest more or, let's say, grow externally in this area, but the opportunities are not so easy to catch. So I wonder whether the scenario has changed or it's remained the way it was a couple of years ago. And those are my two questions. Thank you.
Okay, thank you. So regarding our cost of debt, so what we're foreseeing is for it to gradually increase slightly and basically end up at approximately 3.1, just over 3% towards the end of the plan. Why? This is because we've projected of course, an interest rate curve. And according to our projections and to discussions that we've been having with certain financial institutions, we're foreseeing an increase in reference interest rates and subsequently a gradual decrease starting in mid-2027. And so this brings our overall cost of debt to approximately just over 3%.
Right. Remember that some of the bonds were issued when there was a different completely period in which we were looking yesterday. There is one bond that was issued with 0 interest rate. So it's difficult to lower the 0 interest rate. And there are many others that were issued, 1.46, 1.7. So that's, I mean, with the interest rate where we are today, it's clear that our interest expenses will slightly increase over the plan period as much as we are going to replace and reissue new bonds. Regarding the water, I will not say it's thank you for the exceptional increase, but it's not, I mean, we are not magicians. It's just that we are consolidating two of the companies that as today are not consolidated, so are at equity. So that is the way. So when you consolidate, RAPs come up, EBITDA come up, but then net income is always the same, except for the efficiency that we are able to bring. So thank you for the exception, but is again. M&A in water, you responded to yourself. There is no opportunity, unfortunately. Because that infrastructure the Italian water infrastructure need a lot of investment and need a lot of innovation, especially, I would say. So they need 2 steps forward, investment and innovation. But that is what we are applying to our current assets, but that is the perimeter that we have. We didn't see any other opportunity as of today. Hopefully, the situation may change in the future.
Next question. Ella?
Thank you. Hi, all. Yeah, Ella Walker-Hunt from Citi. Thanks for the presentation. I have 2 questions. My first question, you've spoken a bit about balance sheet flexibility and the optionality you have there. Could you maybe rank the different levers that you have in terms of M&A, higher dividend, share buyback, how you would rank those different optionalities? And then my second question is to do with M&A. Is there any real sizable M&A that you can do that's feasible, whether that be in Italy or outside of Italy?
Well, I thought I had already responded on the first question, we don't have any plan to dividend increase or buyback. I think the best way to employ our flexibility is to find new investment for creating growth for the company, as well as creating value for our shareholders. So the flexibility that we are creating in our balance sheet is to be able to capture opportunity in the market. Imagine that if that discussion would have been done differently years ago, we would not have been able to capture the TUI rete gas opportunity. Thanks to the flexibility that we created over time, no buyback, dividend 65%, that is the right balance, we were able to capture the TUI rete gas. I mean, that's the evidence and the answer that our policy is we want to invest in the company to grow, and that brings value to our shareholder. M&A, as I said before, we are looking around not only in Italy, but also in Europe. And if anything will come out, we will look carefully. The three lens that I discussed before are still there. Are there any sizable opportunity? As of today, we don't know. If you have any idea, please bring that idea to us. We will be very happy. But that is what it is. I mean, we see that there may be in the future some movement about opportunity in Europe, but let's see where, when, and if it makes sense for us.
Next question. Hi, Alexandra Sova, Equita. Thank you for taking my questions. Some follow-up questions vis-à-vis what was already asked. So, again, maybe on financial flexibility, just a check. Do you include in the current plan, or would you consider hybrid instruments, hybrid bonds over the coming years? The second one, again, on M&A and capital allocation. All right, the fact that you prefer to invest in M&A or RAB-eligible CapEx, but let's say that you don't find an opportunity that ticks all the boxes for your stringent criteria. Would you consider, in that case, giving back to shareholders at least this potential 500 million in M&A you expect in the plan? And then one on concessions. Maybe an update, if you have any update on the Rome concession. So if your current plan envisages that you are awarded or keep, let's say, the Rome concession. And a very final one on inflation. Again, so since we have seen a reacceleration in inflation, so if you think that this could in some way put some pressure on your cost efficiencies targets, and on the other hand, if the current average 2% deflator you are including in your plan is a sort of floor, and if maybe you expect to see ARERA coming up with a higher deflator, as it was the case a couple of years ago. Thank you.
First question, no, we don't, as of today, we don't have any plan to issue any hybrid bonds. Second question is, I mean, it would be easier for me to answer to say, yes, if we have the flexibility, we'll give it back to the shareholder. I think it's much more challenging for the management to find a new industrial opportunity, because that creates value for the company and for the shareholder. And we have demonstrated, I mean, this question has been raised every single capital market, every single meeting with the investors, and the answer has been always the same, and it's not just a matter of answer. Reality demonstrates that we were able to find different investment opportunities. I list them at the beginning of the presentation. At the beginning, the tenders were slowing down. it was reminded by one of your colleagues, we had like 11 or 12 M&A acquisition. Then we started to invest in energy efficiency. Then we look at the water. Then Greece come up and we participate to the tender. Then there was the Italgas opportunity. So, I mean, being agile, flexible, financially and operational, it's a great value in which you can take opportunity that came up. So my answer is always the same. I prefer to allocate the flexibility in order to grow the company. That will bring also value to the shareholder, as we demonstrated over the years. Regarding Roma concession, there is no news. I mean, we provided to Roma, to Comune di Roma, all the information they needed to launch the tenders. Of course, we are ready to participate. It's our largest tender by far, largest concession by far. But there is no, we don't know we have, I think, planned it for to happen at the tender in 27 and the award in 28 in our plan. Inflation may increase. I think that our synergies plan is probably the best remedies to tackle the inflation, because we demonstrated that we can, reviewing our processes, our industrial processes, we are able to reduce the cost. So we are building in our body the best resilient antivirus, if you want to call it, if the virus is the inflation. So we are ready to tackle any inflation that may come. Of course, we will say depending. We see the inflation has been increased driven by energy costs mainly. So if the energy costs will go down, we will probably experience also the inflation later to go down. Deflator is extremely linked. Remember that the step up made by the regulator in the past is because they changed the reference of the indicator, the SAP, whatever was called before. Now it's a different one. It's fully linked to the inflation. So of course, if the inflation is going up, also the deflator is going up. They are strictly linked with only a time lag of difference. So we don't expect any further step up. If the inflation is going up, probably later on also deflator will go up. But the two indexes are extremely linked.
Thank you. Very clear. Other questions? Yeah.
For me, Emanuele Gioni at Kepler Cheuvreux. Thank you for the presentation. Basically, everything has been already asked so far. So just a consideration on your, you are probably the most vocal management in the sector, in Italy at least, on the AI application, on the AI opportunity, etc. You are for sure the first mover, etc. So first of all, congratulations. But then the question among investors is also why, what was the starting point? Why you are building this basically competitive advantage compared with your peers in the gas distribution, but also in overall in the regulated networks. So what are the main drivers at the starting point, basically?
Very good question, honestly. It is, and the reason goes back in the past. I think that in order to get the most of AI today, you need to have two things: a truly digital platform and a very good quality of data. If you don't have these two, well, you can talk about AI. I've been in several conferences where everybody were talking AI, everybody were talking use of AI. But then when you dig a little bit from the surface, you find that below there is very little. I agree with you. The fact that we are where we are today and we are able to leverage the AI in such a massive way is because, go back what we have done. We went to cloud, public cloud in 2018. So we are talking about 8 years ago. Today is no brain to go to cloud. 8 years ago was the vision. And since then, we build our IT, let me say, governance based on leveraging the cloud availability. The reason why we were able to merge with Italgas in 90 days is thanks to our IT approach and the cloud availability. And to the fact that since then, we clean our application map, and more important, we clean the data every single year, right? I always use the imagination to say we put the data several times, our data several times in a washing machine, and the data every time came more cleaner than before. And in the meantime, the digitization brought us billions of data. So now we have a huge data lake. Data inside the data lake have a very good quality, are clean, and we have a digital approach that is spread, is a part of the culture, is spread throughout the company, is part of the culture of the company. And that's the reason why we are ready to take advantage of AI, because it's the natural frontier for us, because we have already done all the digital parts. So we are there, and we are able to make the same approach. One clear example, Digital Factory. Digital Factory has been established back 8 years ago, in 2018, still working, going through improving the processes, making the processes simple, the application, digital, everything. Now we are using the same agile approach for developing AI application, AI agent. We are using, we call, not digital AI room. But instead of the discipline that we imposed to us on the digital room, 4 months to deliver an application, is the same discipline that we are using now to deliver an agent AI, with a big difference that is not going to be 4 months anymore. It's going to be 4 weeks. So we are continuously disciplined in developing new technology. And that is the great advantage. That's the reason why AI is our data backbone. That is the reason why we are building AI on a strong foundation, that is the digital platform that we develop, as well as the data, the good quality of the data. Those are the 2 pillars. If you don't have them, okay, you do some POC, some pilot, something, you do the showcase, but at the end of the day, you are not able to really change the operational behavior. AI will change, is changing our operational behavior on a day-by-day basis.
Is there other questions from here? No? Maybe, operator, are there questions from the conference call? For those that are in the conference call who wants to register, star 1.
At the moment, we don't have any questions from the conference call.
So, everyone, a lot of questions, so I guess,
thank you.
Thank you all.
Thank you very much for your participation.
So for the analysts, of course, as IR team, we are available, and thank you everyone for participating.